Hello and welcome. You're watching Market Meter on Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi Batra, and on this show, we get you an update of how the markets have been trading in the first half of the trading session, and also to help you understand how our experts really looking at the market scenario currently and what should be the prudent strategy that investors must definitely have for their portfolios as well. Joining in is a very special guest, Mr. Gaurav joins in from CapitalVia Research. Thank you very much, Mr. Garg, for joining in, and good afternoon to you. I wish to understand from you, how are you looking at this current market scenario? Again, we have been seeing volatile trades, but the markets are still holding on to the green mark. There's a 0.4, 0.3% of an uptick right from the start. Very, very tight range in which the markets are trading at today. But do you see the momentum sustaining? Is there an overhang? What is your approach to the markets?
Yeah, hi, good afternoon. Yes, so I think for last few days, market has been consolidating in a narrow range. It is still a sell on a rise kind of market, but people who are looking for long-term investment, I think this is the market is giving some good opportunities. Whenever there is a dip in some good stocks, one should actually look at accumulating those stocks for really long term, because in short term the volatility is still expected to continue as the VIX is rising. Today we have seen some fall in India VIX. However, for last few days India VIX was rising. On institutional front as well, we have seen FIIs turning aggressive sellers on the market while DIIs have been buyers. So from that front as well, I think the markets are going to remain choppy for some more time. The only factor at this point in time which is kind of impacting market is the news related to COVID. I mean, yesterday, India saw its all-time worst tally of new infection cases with 4.12 lakh cases. So I think till the time the situation is not under control, I think we are going to see a lot of volatility. So people tracing index, I think they should kind of not. I would suggest them to not invest or trade heavily in index, while certain stock specific action is something which one should look for making some good money out of this particular market.
Okay, I understood that. It's better or more prudent to actually stay away from aggressive trades on the index since we are seeing heavy choppiness, and that is likely to continue, according to Mr. Garg. Now, help us also understand, what do you make of the RBI stepping in and, giving a healing touch of sort to the markets with respect to the liquidity that they have provided or the measures that they have taken yesterday? Does that change the way how you are approaching several sectors like banking, healthcare, and the other sectors, and any more preference sectors that are coming into your picture now?
So I think from the current standpoint, sectors like banking, realty, and automobile, I mean, these are the sectors which are going to be trading with a lot of volatility, because as and when there are situations with respect to lockdowns, these are the sectors which are directly impacted. When the next quarter earning results would come, we might see some pressure on the NPAs of banks, because there would be certain loans which might turn out to be NPA. Automobile and realty, obviously, I mean, these are discretionary spendings, and people would definitely shy away from doing that unless and until situation improves. So I think these three sectors are the sectors which probably one should not focus on too much at this point in time. While sectors which are defensive in nature like pharma and FMCG should be topics, also one should
Okay.
look at accumulating good IT stocks as and when they are available at discount, because the world is moving towards digitalization and more people are working from home. So IT is expected to continue doing well.
Sure. Let's now come to your stock recommendations for today. What have you picked for the viewers of Money9? Where can investors keep their focus and what can give them good profits over long term?
Yeah, so as I said, these are some good opportunities wherein investors can look at really good stocks and accumulating them for long term. One should pick stocks which have healthy track record of performance as well as healthy balance sheets to actually steer away in this kind of situation. So first pick is Blue Dart. So this particular company is one of the largest company in India in terms of its reach. It is also a primary partner of FedExpress. So I think this company is rightly positioned to actually do really well. This has done well in terms of showing top line growth even during lockdown situations as well. It has invested heavily in its technology to make sure that deliveries are paperless and touchless. So I think Blue Dart has always been a pioneer in implementing industry leading solutions. It has got good reach, and I think it can be accumulated at current levels, which is at around 5,500, and one can see a target price of 6,400 in next 1.5 years.
Understood. From the logistics space, Blue Dart is something that one can look at 1.5 years of perspective, and you can definitely expect strong upside over here. Which are the other sectors that you're looking at, and which picks can you share with our viewers also again?
Yeah, so as I said, FMCG is one of the uh, better sectors, defensive sectors to look at this point in time. And one of our top picks is Britannia Industries from FMCG space. It has got a lot of known brands like Marigold, Good Day, etc. Britannia has also done really well in terms of top line growth. The company spends a lot on marketing as well. It has got certain industry leading products on. If we talk about the biscuit category, the mid premium biscuit category, it is the market leader. It has done really well in terms of distribution. In lockdown as well, I mean, we have not heard stories of its stock going out of stock. So it has done really well with respect to that. I think one can accumulate this particular stock at the current level, which is at around 3,450. And the price target that we have for this particular stock is around 4,000 in coming 12 to 18 months.
A 500 rupee upside can actually be seen over a long-term period for Britannia Industries, which boasts of robust supply chains despite the lockdowns. It has maintained the consistent stocks, and all of those fundamentals have been backing the momentum so far, and it is likely to see further upside from here. And your last recommendation would be from which sector?
So this is from the specialty chemical sectors. It is UPL. This company is also one of the, I mean, big players, global players in fertilizers, chemical space. The company has done well. Although the stock price has been under some kind of pressure, but I think that also gives us a good opportunity to accumulate this particular stock. The business model is a proven model, and with more and more focus on agri-based economy. I mean, government has time and again reiterated that they have all the focus on making sure that the farm incomes double, the agriculture output kind of improves, the per acre crop production also improves. So I think this particular company is rightly placed to make sure that it can lead what the government is planning for. The current price of this particular stock is at around 635. One can look at target price of around 800 in coming 18 months. So I think this will be a good time to accumulate this particular stock.
A specialty chemicals major, UPL Limited, can further see upside from current levels, and that's something that you can definitely keep an eye out on as well. Thank you very much, Mr. Garg, for joining us and for sharing your views on the markets and the stock recommendations that you've shared with all our Money9 viewers as well. Let's move on now to see how the markets are trading at this point in time. Of course, just above the flat line, it has been a very lackluster kind of trade in the first half of trading session. Although the markets are just holding on to the gains, but they are just limited to 0.3, 0.4% of gains at this point in time. Very mild momentum, 150 points added to the Sensex, and the Nifty is also moving ahead with about 70 odd points of addition to itself. The Nifty bank is absolutely flat and just trading just above the flat line at about 0.07% uptick right now. Of course, there's higher momentum in the broader market space with the mid-cap stocks moving in or inching up higher with 0.4% of gains at this point in time at 20,516. And the small cap index is also inching higher with 0.4% gains at 22,133 levels at this point in time. But all the major indices do maintain themselves above the green mark as well. Now let's move on to see how the sectors are placed at this point in time. Of course, in the morning trading session, we had seen that all the sectors were trading in the green, and now we are seeing slight slippage coming in from the pharma space. PSU banks, which have had a strong week so far, they have run up quite sharply in the past few trading sessions. The private banks are also slipping into the red now. These three indices are in the red, but apart from this, all of the others are holding up into the green. The metals have increased their momentum. They're now inching up higher almost by 2% at this point in time. The IT index has also logged in some gains in the first half of trading session and is now trading at over 1.25% uptick, and so is the auto space as well. trading at 1%, 1.5% kind of gains at this point in time. 0.5% gain remained for the financial services. That is still holding up strong when you talk about the entire Nifty bank, because it's actually getting pressure from both banking spaces, PSU and private banks, but the financial services are still holding up with about 0.5% of gains. 0.5% gains also for the realty index stay as it is, and also the media stocks are inching up higher with just 0.2%, and so is the FMCG index as well. Now moving on to see what kind of gainers and losers are we seeing as far as the Nifty 50 index is concerned. Now the top 5 gainers from Nifty 50 includes names from the auto space, from the metal space, and you can clearly see Hero Moto and Bajaj Auto, these two-wheeler stocks really inching up higher at about 3 to 4.5% uptake. Apart from this, it's Tata Steel, Hindalco from the metal space that inching up higher at 2.5% uptake, and Wipro maintains after the kind of momentum that we are seeing that it has tied up with global giants on the augmentation intelligence field with respect to vaccines. So that is really pushing up this counter at about 2.9 odd percent at this point in time. Now, as far as the losers are concerned, let's see which are the stocks that are really lagging in trade. Now, it is UPL that's not really performing right now, 1.5% downtick over here. However, Mr. Garg did have this as his stock recommendation for the next 6 to 12 months period, and that's something that he expects the momentum to continue going on forward for the long-term investors. Asian Paints, Shree Cement, Tata Consumers, all of these sectors from the consumer discretionary space, the stocks are down about 1.5% in trade, and Power Grid is also down by 1%. But overall, if you see, the market breadth still favors the advances at this point in time as far as the Nifty index is concerned, but there is some kind of selling pressure coming in onto some pockets like pharma and banks at this point in time. We'll just have to wait to find out how the closing happens and if there is any more selling pressure coming in on the other sectors as well. We'll keep you posted on that, so stay tuned on to us on Money9.com.